Now, if you're a growth investor like myself, it's safe to say that 2022 hasn't exactly started the way we wanted. And whilst over the past couple of weeks there has been a sliver of hope with a couple of green trading days, if you invested into multiple growth stocks like I did at the back end of last year, we both still have a pretty long way to go before we see any light at the end of the tunnel. And of course, I could have just hidden away until things did get better within the stock market, but that's not the reason I made this channel. I made this channel to be 100% transparent. So having said that, grab your pillow, cover your eyes, because this Trading 212 portfolio update is about to get ugly. Let's get into it. All right, so let's kick things off with my first investment, and that is into Coinbase. Now, this was actually doing really well towards the latter part of last year. Around September, October time, things were starting to look on the up for Coinbase. But of course, just like all the other growth stocks recently, it has been absolutely decimated. And right now, we're currently sitting at 23.04% down in terms of my investment. I hold 6 shares into this company exactly, and that equates to me being around £250 down, which if it wasn't for the Forex exchange, it was going to be even worse than that. Next up, we have Corsair Gaming, which is once again another high growth company, which I'm heavily invested into in terms of allocation of my portfolio. This one is only 20% down, so not quite as much as Coinbase. But if we take a look at how many shares of Corsair I've got, it obviously is going to mean that I'm going to be a lot more down in terms of an actual monetary figure. As you can see, I'm currently £787 down, and this one, my Forex hasn't exactly helped me either. I'm about 76 pence down on the Forex exchange, but that's not really going to make any difference here at all. I'm around 20% down, and that would be even worse if I haven't been buying the dip on this company recently. I believe it's around 50% down from my initial investment, but because I've been buying the dip all the way down to where it's sitting at around $20 right now, I've managed to lower my average price significantly down to $24. So it's not the end of the world. All it takes is another $4 for this company to go up. Yes, that is about a 25% price increase in the stock price, but it's just that I need, and probably a little bit more on top of that, which I need to actually get my stock to get to that break-even point. Once again, another stock that I'm not going to sell out of. I have got so much confidence in this company going forward. I am a massive user of their products. I think there is so much growing that this company can actually do, and I'm really excited for their earnings call in around a couple of weeks' time. Next up is going to be DraftKings, and this is the one that has really hurt my portfolio. As you can see in the past year, this stock is currently 63.27% down. Luckily, I haven't seen the full effect of that drop, but things are still pretty bad. If we go ahead and take a look at my investment into DraftKings, as you can see, I've got 89 shares and my investment is 48% down, which equates to a £1,332 loss. Now, this is a company that I have received some flack on in terms of my YouTube comments since I made a video saying I was going all in on this company. And once again, I'm not going to be selling out. This is a stock that is down 60%, but it's not alone in that category. There are so many other great growth stocks that are currently this much down. And it's very much a thing where I don't believe it has much to do with the company at all. I personally don't see any bad news coming out of the DraftKings camp. Of course, I'm going to get a much better understanding when earnings come out in a couple of weeks' time. But once again, there is nothing really that has come out to say to me that I should be worried in the long term for this company. Yes, it doesn't look great right now. And yes, if you were an investor at the same time I was investing, you may feel a little bit scared and maybe want to cash out. But the reason why I invest is because I invest into a company that I believe in. I don't invest into the stock price. This company has been dropping. I haven't been able to afford to buy into this as much because I've been basically buying into all the other companies that have dipped as well. But as crazy as it sounds, even though I've lost almost half my investment, I still feel exactly the same way about this company as I did when I first started investing, which I actually think is a good sign because there's been so many people recently have been selling out and panicking, which is completely against the core principles of long-term investing anyway. Just taking a look at my average price, I've managed to get it down from around $48 or $49, which was when I first started investing, all the way down to $42, but I'm still a way off getting anywhere near a break even for that. And I probably would say I'll be a way off for the rest of this year. I can't see this recovering back to me being in the green anytime this year, but that doesn't mean that I won't stop investing into it. I'm going to continue to try and get that average down as much as I possibly can whenever my capital allows me to do so. So that's DraftKings. Next up is my investment into the Ishares electric vehicles and driving technology ETF. And as you can see by my investing amount, this is something that has completely gone to the back of my priority simply because I've been pretty much catching a falling knife on all of the other companies and I've been putting all my capital towards those. So this one has really taken a back seat. Still really bullish on the EV industry, but as you can see, I've completely non-prioritized this investment as I've only got 9 shares and I'm down around 10%, which only equates to £5 roughly down, which isn't a bad thing either because I haven't exactly missed out on any gains because I haven't been investing into it. I'm still gonna start investing into this, but like I say, my priority has been completely elsewhere. Moving on to my investment into Tattoo Chef, which is basically a meat-free fast food company. If you haven't heard of it, it's a very popular YouTube stock, and I will be 100% transparent. I did first hear about this from Financial Education Jeremy. However, I did decide to do hours of research into this company and I decided that I thought it was a good buy, which I do still think is the case. This company has reported amazing growth numbers over the past couple of earnings calls. There was a blip in the last earnings call where they decided to delay their earnings call like hours before they were due to report, which really did get me concerned. But when they did come out with their earnings call, it did make up for it because the results were better than what I was actually expecting. But in terms of my investment into this company, I'm 160 shares deep into this one. I'm around 31% down, which equates to a £650 loss. And this one is definitely being made look better than what it is by my £63 gain in terms of a Forex impact. So not great, but once again, if I was worried about this company in the long term, I would have sold it by now. This is a recording of my phone, which you can see. I still own this company and I still believe in this company going forward. Next up, we have a positive result, which is Walmart, which, believe it or not, is not a growth stock. So that will probably explain a lot of things as to why I'm up in this company. I'm up 2.35%, which is £16. I've actually spent the last couple of portfolio updates deciding whether or not to actually sell this stock because it's a completely boring one for me. I haven't really done much in the 7 or 8 months since I've invested into it, but that probably tells why it's doing all right in times like this, because these are the companies that just do well. Walmart, McDonald's, Coca-Cola, they're not growth stocks, they're recession plays that you can invest into that will always bring you those steady returns. This one also pays a dividend, so in terms of that £16, that's probably a lot higher if we were to add all the dividends up as well. But nonetheless, a bit of a nothing stock, but at least it's one green stock in my portfolio. Moving on to the next stock is going to be Walt Disney, which of course is going to be down for me. It's around 20% down on the year. In terms of my investment, I'm 26 shares deep into this one, which means I'm 17.24%, which equates to around a £570 loss. Once again, being made look a little bit better with the Forex exchange. But we've got earnings round the corner, which could make a significant impact on this. In terms of my confidence for the earnings call, it's pretty much 50-50. We've had Netflix report their earnings, which is a very much similar company to Disney now, because of course we've got Netflix versus Disney Plus. And Netflix, if you hadn't seen already, had horrible earnings results, which could mean a factor in terms of Disney Plus growth. But the great thing about Disney is that Disney Plus isn't its only revenue stream. One thing that's been really positive is that the parks of Disney are starting to open up. I believe production in terms of the films are starting to get better, and I'm hoping in terms of their earnings call next week they can just hit those Disney Plus growth numbers and then produce really good numbers in terms of the revenue front, in terms of the parks and the other revenue streams as well, and we can see a nice pop in terms of this stock. This is one that I mentioned in my 2022 investing plan that I'm really going to be concentrating on investing into this year. It's a company that I really do believe in the future. Obviously a massive company that isn't going away anytime soon, but I have decided to wait until the next earnings results to come out before I make my next move into Disney stock. So when you look at things for me right now, things do not look great. My portfolio is down around 25%, But as you can see, as I've just shown you right now, I have not quit on any of my stocks because every single one of my companies I invest into for the fundamentals of that business and my belief in that company going forward. And another reason why I think I'm able to keep my emotions intact with my growth portfolio being down this much is simply because my growth portfolio only accounts to around 20% of my entire investment portfolio. So if you did want to check out my other investments, check out this video here where I talk about the different blue chip companies and different ETFs I invest into. I can assure you it's a lot more prettier than this one.